Hey, JJ here with the Art of Value. So today I wanted to just first read something that I posted online this morning, just about what the emerging tech devastation that's continuing. I mean, I'm sure we're all seeing it. Some people will be heavily invested, others not so much. What I wanted to say was I noticed in an investing group that I go to that a lot of people have very heavy losses who are just concentrated in emerging tech. Quite a lot of new investors. So what I wanted to say was there's something positive because this just ongoing devastation. Some real talk, positive talk. A lot of growth investors, mostly interested in tech, are bleeding bad. I'm not immune. I've got some stocks down big, and it could get worse. The way I see it, especially for new investors who were not expecting this, it would be easy to capitulate and get scared out of the market completely, as happened after the tech bubble. I think in this situation it becomes about survival to get through to the next cycle, however long that takes. I'm giving those stocks some time. There will likely be some losers, and I'll eventually cut those and consolidate into long-term winners. But I'm not hurrying to do that when parts of the market are getting irrational to the downside. It got irrational at the peak. Now the pendulum is swinging the other way, and it's brutal and really tests conviction. So that was the truth. What I was saying there, that like I have got some stocks down big, others not so much, like Micron Technology and what else? Some Nelnet and something else that I can't that escapes my mind right this second. But I do have some that are down big that I thought weren't expensive, objectively not expensive, but when the market gets irrational, it takes them all down, and some more speculative or early stage small caps which are down, which I won't go into here because I want to talk about other things, so maybe some other time. But some of those will be losers, as Peter Lynch said. You only need 50 to 60%, which that's hard of winners to do very well over the long term. So if you think about the dot-com bubble, a lot crashed and disappeared, but we had some big winners out of that, and really test conviction. Back in late 2020, stonks only went up, so people, these things didn't matter. The fundamentals went out the window, and on the downside, fundamentals go out the window too. So yeah, that are my thoughts for today. I want to be positive because in the last session, obviously it's continuing. I've been talking about ARK as the poster child for emerging tech. It's just being hammered day after day, and it's back to like early January 2018 price at the moment. So they talk about 5-year time horizon, but the past 5 years is not looking good at the moment. I think it's not beating the S&P 500. It's not beating the market after beating the market by hundreds of percent during 2020. But it's not the only one. Look, I saw this late last night, my time. I saw this article in the Financial Times. Tiger Global hit by $17 billion losses in tech rout. Hedge fund suffers breathtaking drop as speculative stocks sink from pandemic peaks. The Tiger Global has been hit by losses of about 17 billion during the year's technology stock sell-off, marking one of the biggest dollar declines for a hedge fund in history. The run of poor performance means the firm, one of the world's biggest hedge funds and a big investor in high-growth speculative companies whose shares have tumbled since the pandemic peaks, has in 4 months erased about 2/3 of its gain since its launch in 2001. This is 2001. According to calculations by LCH Investments. The magnitude of the loss is breathtaking, especially for a fund with hedge in its name, said Andrew Bear, managing member at investment firm Dynamic Beta. Blah, blah, blah. So, Tiger Global, it's not just ARK, is it? But when we look at ARK, I've got on the screen here, if you're on YouTube or Spotify, this Spotify video, you'll see that ARK is down. So for the last 5 years, which is the important one, they talk about 5-year time horizon, right? Always 5 years. So they talk about 5 years from now. But if you go back 5 years now, 53%, nearly 54% gain in the last 5 years. Okay. and that the S&P 500 has had a 67.34, so it's not beating the S&P 500 anymore. And the thing is, there may be more pain to come if we look at just what happened even after hours. So after ARK had another hit, some of their big positions, Unity Software, I think, is like in the top 10, around the top 10 of their positions. Dropped 4.47 during the session, during the trading session, but after hours it's dropped 27%. So if that holds, it's surely going to hurt tomorrow for ARK, being such a one of their main position, one of their big positions. SOFI, I'm not actually sure if they hold SOFI. I just wanted to put this up because that was down 12. The earnings are coming out. It's earnings season, 12.06%. I'm not sure what happened there. I haven't really been following, but the fintech space has been hit hard. I do own Square, bought recently, so I'm probably expecting that probably to go way down. It has been. Maybe it'll go down a lot more, but it's one of my long-term positions that I started recently, actually, in this tech route, as they say. So Coinbase, it's an ARK favorite, and it was down 12.6% during the trading hours, and nearly 14% after hours. So if that holds up, obviously they got hit by the Bitcoin downturn. A lot of their revenues come from rely on crypto trading. So I think we kind of saw that coming. But then people were questioning, well, if people are selling Bitcoin, don't they get fees from that? But and here's another one from yesterday, Canoe. So this is not an ARK holding as far as I know. But EV startup Canoe posts going concern warning, may not have enough cash to continue business. Traded at $24 at the top of the bubble, and now it's 3.16. So they're in trouble. And yesterday I talked about, I think Gary Black, an analyst who's Tesla. He posted the list of, if you want to go back to yesterday, he posted a list of results from like a year or year to date, from the peak of different EV companies, Canoe being one of them, and so it's down bigly from the peak. And there's a lot. Tesla's the best. But there's a lot that look like a bubble to me that is kind of bursting, and Canoe now seems to be in actual trouble. Desktop Metal, I think, is an ARK holding. I don't know how big it is, but I remember seeing it there a while ago. I don't know if they're sold or not, but that's down 61% during this trading day. 61% in one day. Oh man, this is it's just absolutely brutal. And Unity Software. I've talked about that already, down 4.66, and after hours, when the screenshot was taken, down 35%. Wow. I mean, some of these companies, it's not to say that they're going to go out of business. I haven't looked at Unity properly, but I remember when IPO, I remember looking at it and thinking that's actually a decent business, but wow, is it expensive. And it's down. And Coinbase, we looked at that. Coinbase reported, the thing is that, by the numbers on their reporting, a loss of 1.98 per share EPS, revenue 1.7 billion versus 1.48 billion expected. So that's a miss. That's why it got hit hard. The stock had more than 60% of its value, has lost more than 60% of its value since March. There's a broader slide in the tech, blah, blah, blah. Retail monthly transactions fell to 1.9 million, down from 11.4 million in the fourth quarter, while total trading volume dropped from 547 billion to 309 billion. There you go. That's a big drop in trading volume there. So we can see why it's had that in this market. Something like that's just going to get smashed. Roblox, another retail fave. I think, is this an ARK stock? I think it might be, and it was down 5.77%, and after hours 7 0.16, which isn't actually that bad, to say that's not bad in those circumstances. Yeah. So, and then the results, they had a loss of 27 cents versus 21 cents expected. I mean, I don't like to say these, but if what analysts are expecting, but the fact is the market reacts to it. So the revenue was 631.2 million versus 636 million expected. So they came in, that's not too bad considering. Upstart Holdings, okay, this is the end. So Upstart, you remember that the guy on, I think it was on CNBC, who didn't know what the company was. All he needed to say was, I don't know what the company does. I'm not trading on fundamentals, but turned into a big deal where he got caught out not knowing what the company does. He was just trading on the stonks. Kind of that may turn out to kind of be the peak. And it's down 56.42% in one day. Wow, it just got absolutely hammered. And down a little bit more after hours, but that's just in one day. And so that's down from the peak, down over 90%, 91.38% from the peak back in October 2021. So that's it. That's all I have for you today. I just wanted to run through that, just going through a bit of the devastation, but positively about survival, coming out the other side if it's you. That's you. And as I said, I've got some positions down big. I'm not rushing to sell anything. In fact, if I have conviction and I go through the numbers and it's looking to survive and thrive out the other side. So the dot-com bubble, if you survived and thrived, I mean the big ones, right? Some of these turned out to be $1 trillion companies. So it's likely to happen again, but not. With Kathy Wood saying we've got a portfolio full of Amazons, which I thought was just an unbelievable thing to say, and I know she believes it, but it's very unlikely. And but some of them will pull through. I mean, I do have some stocks that ARKK owns. Spotify is one of them, and Block is the other one, SQ Square. And we'll see how those go over the years. But there's some beaten down prices right now, that's for sure. All right, if you got value out of this, if you just like and subscribe on YouTube, hit the notification bell on YouTube and Spotify, video and Spotify, and YouTube and audio elsewhere. Okay, thanks. See you next time.